Last week I told you gold had closed below 4,230, and I stayed bearish. This week, gold dropped all the way to a low of 3,958, finally cracking the 4,000 level, before bouncing back to close around 4,080. So let me be straight with you. Short term, gold is bouncing, and I'm going to show you exactly why, and where I think it goes next. Here's what I'm seeing on the chart. Gold has been moving in a clean downtrend, lower highs and lower lows. If you measure the selling, the last drop matched the one before it almost perfectly and printed a new low at 3,958. Now, two things are telling me a bounce is coming. First, the structure. After a move like this, price usually pulls back to form the next lower high. Second, momentum. On the daily, the RSI is showing a bullish divergence. Price made a lower low, but RSI did not. That means the selling pressure down here is weakening. So here's my plan. I think gold bounces toward 4,200 to 4,230, my key level. If it gets there and gets rejected, that's a lower high, and the downtrend continues. That bounce, for me, is a selling opportunity, not a reason to turn bullish. 4,230 is my line. Rejected there, bearish, targeting the 4,000 support again, and below that, my bigger target of 3,650, where there's a gap on the monthly chart. But a strong daily close above 4,400? That would invalidate my bearish view, and I'll adjust. Now the bigger picture backs this up. The dollar index just broke out of its range and is pushing higher, targeting 104 to 107. And remember, when the dollar rises, gold falls. They move opposite each other. And the fundamentals? The Fed has turned hawkish under Warsh. The dot plot shows 9 of 18 officials want at least one rate hike this year. Bank of America now expects 3 hikes and no cuts until 2028. Markets are pricing a 60+% chance of a September hike. Higher rates mean a stronger dollar and more pressure on gold. But I'll be honest with you. Long term, the big banks are still bullish on gold, targeting 5,000 and above on central bank buying. So this is my short-term swing view. The structure right now points down, but I respect the bigger forces and I follow the chart, not my ego. This week is loaded. Monday and Tuesday are quiet, but Tuesday is month end. The 3-month and 6-month candles close. Right now, that 3-month candle is a strong red, and the 6-month is forming a shooting star. Both bearish if they hold. Then Wednesday, Warsh speaks, followed by ISM Manufacturing PMI. And Thursday is the big one, non-farm payrolls and the jobs data cluster. Strong numbers fuel the hawkish story and pressure gold further. Now Bitcoin. I'm still short from 78,000 and 67,000, and it's playing out. Bitcoin tapped a low of 58,100 this week. My next buy zone is 55,100, getting close now. The structure is bearish. Bitcoin is about to test its 200-week moving average, and a break below that is a major bearish signal. On top of that, USDT dominance has recovered above 9%, pushing toward its all-time high. When dominance rises, money flees Bitcoin into stablecoins, bearish for crypto. There's one short-term catch, a bearish pattern on dominance that could give Bitcoin a small bounce. But the bigger picture? Still down. So here's the bottom line. Gold. I'm watching for a bounce into 4,230 to sell. Bitcoin. Bearish, eyeing 55,100. The dollar is rising, the Fed is hawkish, and the structure on both is pointing lower. I post this forecast every single week, and you've watched the calls land. If you want to stay ahead of gold, silver, oil, and Bitcoin, subscribe and turn on notifications. This is Bullbearic. Stay sharp. Not financial advice.